All right. Okay, good afternoon, everybody. This is May 10th, and it's Mother's Day here in the United States. I'm sure there's a few people in here that are probably in the dog pound like I am. Yeah, didn't do a very good job planning today, did we? Anyway, no problem. Hi, everybody. It's good to see you all. I'm going to get started here. It's Sunday, and it's our beginning of the week. So what we want to do, of course, is we want to start to look over and see what kind of opportunities we have this week in the foreign exchange markets. So you should all be able to see with a green check mark. Should be able to see a web page, right? And my TradeStation in back there. I'm able to share applications again. Actually, the entire desktop now, so that's pretty cool. Yeah, so let's start off first of all. I brought this web page over for a reason. This particular web page is Forex Factory. Forex Factory news web page. Okay, and it's got news headlines, which we'll go over in a minute, but happens to be one of the places right here on the left side where you can quickly get a glance at the interest rates, the different interest rates in all the different countries. As you can see right now, Australia's got a 3% interest rate, New Zealand 2.5%, the Euro's 1%. Great Britain's down to 0.5%, Canadian's down to 0.25%, the Swiss is 0.25%, the Euro is 0.25%, the yen's bringing up the rear at 0.10. Okay, so interest rates. Any kind of carry trade, of course, would probably be long Australia and just about short anything from Euro down. So as a result, a lot of things happened as a result of Friday. So we had finally got a breakout of the trading ranges that we had been in for a bunch of these weeks. And you can see the headlines here real quickly. The Euro made a bullish statement on Friday as of this week after consolidating aimlessly for the first part of the week. The yen consolidated under a strong resistance, etc., etc. So most of these news headlines are all saying the same thing. Something drastically different now all of a sudden, and these currencies are breaking out of their trading ranges. Now they're saying buy major pullbacks. The headlines here are pretty much all the same thing. But obviously something's changed as far as the currencies go. We're not stuck in the trading ranges we've been stuck in. Again, this website's good for this and the calendar. And the calendar that we'll watch for the rest of the week here. There's nothing really of excitement here as far as news stories go, except for the Australians got a business confidence report, which is a medium impact report. If you want details on what any of these reports are all about and their perspective, reactions in the currencies, you can actually get that information right here. So this is a pretty good place to get some fundamental data. It's one of the reasons I like this particular website. We've got some high impact reports coming up on Monday for the U.S. We've got Bernanke. We've got Bernanke speaking, and I'm thinking Geithner and I'm talking Bernanke, but it is Bernanke that's going to be speaking. So there's some interesting data that's going to be released all week long here. Monday we'll have some high impact reports based on Bernanke. We'll have production in Great Britain, trade balance in Canada, trade balance in the U.S. That's a big one. If you click on that report here, you can see difference in values between imported and exported goods and services. Obviously, the nations that are importing a lot of things, the dollars are going out of this nation because we import more than we export. And this is one of the reasons why no matter what anybody from the government says, they like this weak dollar policy. It's not the greatest thing in the world for the citizens of the country, but it happens to be good for the businesses. Okay, so we'll keep an eye on all of these reports as the week goes on. Sam's actually going to be doing a session tomorrow talking about swing trade opportunities in the Forex markets, and that's good because we'll have opportunities for swings and day trades going forward. Okay, so just want to real quick heads up. Make note of this website for this most important thing, which is the interest rate differentials on some of these currencies. All right, you'll see it in the charts too. When we start to look at the charts, we like the FX Street website too for news and headlines and that. And pretty much as far as fundamentals go, though, no matter what you hear from anything now, the dollar has broken out into a stage 4 decline on the charts, so we're expecting to see the dollar weaken. Okay, so the first chart we have up here is the dollar index, and the dollar index has the weekly chart here, and as you can see, it's not looking too good for the dollar right now. Starting to clear below these lows. There is a little drop base rally on this weekly chart at around 82. We want to keep an eye on just in case it pushes prices back into the range here. All right, but this chart doesn't look as nasty as the next one. This demand level here, which was a new demand level for a while that held price up, is gone, and we're actually pushing down into this lower base. Okay, this is actually a rally base rally with a pullback already, so we're pulling back into this area. Really, if we break through here, we don't have any kind of support until we get way down to the bottom of the chart here. And of course, now above us, we're going to have a couple of new supply levels too to keep an eye on. We've got this higher one here, and of course, we've got this new one here. So any kind of a rally in a market like this should be shorted, because this dollar index is pretty much now heading down and breaking through all of these support areas. But this 82 area is support right now until we trade below here. And if we do, we bounced here at about 79 or so. So it's not looking too good for the dollar right now. I mean, of course, it's a very low yielding interest rate. So it could be in any kind of a carry trade, it would be one of the currencies. It would be one of the currencies that get borrowed. Okay, so the weekly chart of DXY, which again is the dollar weekly U.S. dollar index, very similar chart. The difference is, of course, slightly different. It's a continuous contract chart, so the bases and everything are a little bit different. And as you can see on the weekly chart, we've got a nice little drop base rally right down here, just about 81. Okay, so we'll keep an eye on that to see if it bounces prices for a little bit. And daily chart on this one here, if we bring that up, it does have this demand level. Again, though, it's more like a rally-based rally when you look at it on this particular chart, but it should provide some kind of support. Okay, and all of this other stuff here from the past is toast. This little support area got broken through. Okay, and so now we're starting to break down and make new lows on the dollar here. So we'll keep an eye here on this dollar index. You always want to watch this dollar index when you're trading these currencies, because if it finds support or resistance, then obviously you want to see if there's opportunities in the currencies that we trade in the spot market. Okay. Let's plow right into the Australian currencies, starting with Australian versus the dollar. And TradeStation's been loading pretty slow today, unfortunately. But now, this one for sure, don't fight this. There's going to be a lot of hedge funds, or there's going to be a lot of big monies that's going to go for that carry trade again. And that pretty much means, you know, we have some resistance right above here at about 81. That's probably just going to be speed bump resistance. And as long as these interest rate differentials stay the way they are, and as long as there's positive news out of some of these countries, like Australia, then you can expect money to flow in there. Okay, so all right, so this one here is definitely broken out and had a really big move. I think it was over 5% move on Friday, based on that big breakout that we had. Okay. All right, good. So we're looking to buy dips on this currency, of course, but we've been watching these currencies for a while here. They've all been, this one especially has been in some kind of an uptrend here, and I've had that trend line on the chart for a while, so we've bounced off this trend line several times already. Okay. Last time we had any kind of resistance was at 72 here. It took us a few days to plow through, and we pretty much don't have anything on this chart till we get up to this 83.25 area. Yeah, for Cisco for sure. We're buying dips on any kind of currency that's in some kind of a stage 2 uptrend. And this one definitely is in a stage 2 uptrend. Alright, so this one's pretty strong. But this is going to be strong against all the currencies. You can look at it against the yen. Again, the yen, your interest rate differential is closer to 2.75. It's nothing like it was when we had the big carry trades about a year or so ago, maybe 2 years ago, to where this one was yielding about 8% for a, this one was actually 7.25% versus 0.5% for the yen. So this carry trade is nothing like the other one, but still, I mean, you can see prices have been just flying higher because everybody's buying Australian and shorting yen at the same time. So it's a strong uptrend now, and because of these big speed bars that we had from that currency crisis, we could probably fly a long ways up before we run into any resistance on this chart too. All right, and on the daily chart here, really nothing until we get up until about 87.70 or so. That's the next area where there's any significant resistance. Remember though, it is a daily chart, so you could find some resistance on these speed bumps over here to the left. Okay, but right now it's just rallying pretty nicely. The last opportunity we actually had for any kind of a pullback on this currency was a drop-based rally down here at about 67.40. So it's been pretty much straight up after that. And now we know the reasons, of course. There are a lot of these players that are throwing in with the carry trade again. It's all because of interest rate differentials, right? Okay. So we're going to try to get through daily and weekly charts on most of these, and then look for opportunities on some of the other ones. But anything with Australian we should look at. Australian versus a Swiss franc, just to see which ones give us the best opportunities. Okay, the weekly chart here, it's just been pretty much, your stage 1 accumulation was down here just below 80, and we've just broken out of that range and we're starting to move higher. And there is a little drop-based rally on a weekly chart, comes in at about 83. So if there's any kind of a dip on this currency, then that's an opportunity to buy a dip on this currency. But look at how, you know, again, what always scares me is the angle of these breakouts here are very, very steep. Okay? They could be corrected at any time, but again, unless there's absolutely some kind of positive economic data out of either the yen, the Eurozone, the US or something, you probably are going to see people piling into this thing. And the last time they piled into it, they drove it up pretty nice, like here. Okay, so just keep an eye on that. The daily chart's been pretty smooth. You've got a little resistance area that you're coming up on. You know, this used to be support in the past, so it might be resistance here in the future. And on this particular chart, it's got a little place to buy a dip to, again, closer to 82 here, drop-based rally. But you've got a supply level just above 90 that we'll keep an eye on too. All right, but this is the Australian versus the Swiss. And the only one that really is funky looking, as long as we're looking at all the different Australian charts, is this Australian versus the New Zealand. The interest rate differential on this currency pair is only 0.5%. So this thing is going on its own. It's going on the strength of the Australian economy versus the strength of the New Zealand economy. But it just based and dropped here. It didn't go very far. So be careful going long on this currency pair. Okay? Because now that it's basing and dropping, you should really switch up to shorting rallies. But you look at the weekly chart first and see where we're at there. We're still in this weekly resistance area that we've been into 3 times already. And below there, though, you could drop a long ways on a weekly chart to about 122 from here. All right. Yeah, look, it's at the top of the curve. So you want to really be careful with any long trades on this currency pair. In other words, even though the trend is up, when you're in this high time frame supply, you could definitely your first area of support could get traded through. And your first area of support on this currency is actually this base rally right below where we're at right now. So it's holding us up for now. We could base here for a while. This moving average could catch up to this trading range, and then we could possibly top out and drop from there. Right? It took a long time for that to happen here. Right? It took many weeks, 1, 2, 3, 4, 5, 6, 7 weeks. This is only 2 weeks into this level again. It could also rally from here. If there's bad economic data in New Zealand or bad news in New Zealand, then this currency could strengthen against that currency. I wouldn't bet on it, though. You got the triple top thing going. So we'll just watch this one here. Okay. Very high on the curve, as Luca pointed out. The daily chart, as I said, we broke down and closed below these lows here. So this could be a supply level right here. All right. Yeah, widespread on these exotic currency pairs. Probably the best way to trade these, Bill, is with limit orders. Anytime you take a trade, try to use a limit order. Okay, don't go in with a market order for sure. If you do want to trade these currency pairs, but this one here, I had somebody sent me an email, and it was a really good one. It was about this little level right here. It was a supply level above and a demand level below, and we had like 3 bounces on it. Okay, and when I replied back, I said, you know, if we trade down below this demand level, we'll have a new supply level just above here. And you know, we did make this supply level here, and we rallied into it, and now we've filled the gap up to here so far. There is a demand level below here, which we could probably come down to if we want to also. But if you're going to take this, I wouldn't take this for much more than some bounces up into these supply levels just above here. All right, so if I were to buy this currency, Bill, I'd have a bid to buy it at my price. My price would be 125.83. So if I put in a bid to buy that thing, I'm not really going to worry about the spread. But at the same time, if I buy this thing here, I'm going to get out when we get back up here, because this is now the first area of supply above here if I decide to take that trade as an example. But there's other opportunities. This one doesn't have to, you know, we don't have to spend a lot of time trying to trade this one. There's no interest rate differential, so this thing could just bounce around for a while. The one that really broke out here, and again, the reason being, of course, is this one's yield is 3%, and everybody else's yield, except for New Zealand, is less than a 1%, except for the euro. So that's the reason for the big moves here. Okay, so and where we are from here at this end of the curve, this is the middle of the chart here. This is the supply area up closer or higher up here. So this thing could run for a while. All right. So that's the Australian. The last one we have here, again, the interest rate differential is 2%. So this one's probably going to be, this one here, that's the 4 stages for sure. And at one point in time, there's a lot of currencies that look like this, by the way. This looks like the dollar versus the Canadian. We had this great big chop around zone that we had up here, which of course could have been a stage 3 top if prices broke out like this, or it could have been just an accumulation if prices broke out to the upside. But a few clues that we were going to possibly break out to the downside, of course, was the descending triangle pattern that we made up here. And not too many people, again, trade this currency, but once we broke these lows, this is a stage 4 decline. And the closest area of any kind of support would be way down here now. It might bounce here when it hits these prior highs. It might bounce right here at the origin of this big move. Looks like it bounced a tiny bit on Friday before the close. All right, so, but any kind of a rally up into these levels here would be shorting opportunities. All right, so that's the euro versus the Australian. So that one, again, if we go to a daily chart, if we see we're in this little demand level here, and we bounced out of it on Friday afternoon. But below here, we've got a ways to go before we find anything significant. Okay, so this is kind of bouncing us right now. But if we can go that past here, we can get all the way down here. Just go down and to the left until you find a any kind of a place where you based and rallied. So it'd be somewhere into here. Yeah, Stan, that's another one that's got a big spread. So if you were going to buy this guy for any reason on Friday, then you would use limit orders. All right. Yeah, this is the euro versus the Australian. Right. We're just looking at all the currencies, Jerry, that against the Australian dollar because of the interest rate carry trade situation. Okay. This one really wouldn't. This one is definitely in kind of a downtrend because the interest rate differential. It's 1% though. So, I mean, 1% compared to 2% or 2.5% or 3%. So this one here though, we're just checking all the currencies against the Australian, which is the current high-yielding currency. All right. Okay. So we'll move down, just all the way down the list today, guys. That's what's going to be our focus. Okay. 1 second here while every alert on the planet goes off. This is our weekly chart. The weekly chart really still with the euro versus the dollar, we still got this supply level at 139.22, which we haven't been back to yet. Okay, we managed to push a candle's wick all the way up here though, so I'd be very careful if I was going to take any kind of trades inside this supply level. But we've got this resistance area. We've just cleared these highs. We're just about to clear these highs here. So we could possibly at least go up and test the upper end of this range here. So on the weekly chart, we're still inside a range. So FX Solutions, well, yeah, we'll talk about some of these brokers a little bit here. Okay. Zen's asking questions, since Forex is unregulated and you're always competing against your broker, wouldn't you always use a limit order? Well, question, if you want to just get in and trade right away, moving prices, if that's your strategy, then you're pretty much going to have to use a market order. Okay. But FX Solutions is one of those platforms, like Ed's pointing out, that has fixed spreads. So even during periods of high volatility, they don't widen their spreads. So there's a lot of brokers out there that advertise 2 pips and 1 pip and whatever, but they do widen their spreads during high volatility times, and they'll make back their money that they're giving up on that tight spread. But a platform like FX Solutions doesn't widen the spread during high volatility times. Okay. All right. So anyway, this weekly chart, we still do have some ranges that we're trading in between. But on the daily chart, that nearby supply level that we hit is gone. Okay. This supply level is toast. And this now should become some kind of support at this 134 area. Okay. It is on this chart a base and a rally. Okay. It is not a drop-based rally, but again, if you go inside this base, you're going to find a nice little area to get long on. So we definitely want to buy some kind of dip down to this 133. It's closer to 134. So somewhere in this 134 area. Okay, it's still got this resistance up here that hasn't been tested yet. And again, that's a drop-based drop type of resistance. We don't really have any kind of supply level until we get up here. Now, for everybody that's new here, it's really important that I explain the situation as far as the strategy you're using. The strategy you're using is called a mean reversion strategy. A mean reversion strategy means that you like to trade prices that are at extremes back to balance. It's kind of important that you understand that, because these areas here, these resistance areas that are coming up and these support areas below current price, a lot of people will buy those areas. There'll be Fibonacci traders buying if there's Fibonacci retracement lines. There'll be people buying what used to be resistance in the past should become support in the future. there's going to be people buying for whatever reasons, okay? Where Sam and I like to trade are at the extremes here. So in other words, given our choices between anything on this chart, we'd rather buy down here and sell up here. And we're comfortable with that because we trade multiple markets to where we get opportunities to trade these kind of trades in multiple markets. If you're currency focused only, if this is the only market you're trading, then you have to be able to trade this market without waiting for this euro to get either up to 146 or down to 126. So you need a strategy that gives you the opportunity to trade this market somewhere in the middle here, what we consider to be the middle of the chart. All right. So if I was looking at this chart right now to find equilibrium, Cassandra, probably the easiest way to do it would be just to take that Fibonacci retracement tool from these highs down to these lows and look for the 50% line, which is 141.75. So right here. So if I don't want that Fibonacci line on the chart, then all I got to do is just make this a green line here, so I know where equilibrium is in the middle of the chart. Okay. But once I do put these Fibonacci lines on here, there's been plenty of battles at these different Fibonacci levels. A lot of people shorted the 61% retracement because it's a 61% retracement, and that's just how Fibonacci traders trade. All right. So let me take that line off, those Fibonacci's off. Okay, so this would be what we consider to be equilibrium in the chart. Once it reaches equilibrium, Francisco, can we have a retracement there? It's this way. If this price does get to equilibrium, all right, at this point in time, in the middle of the chart here, supply and demand is pretty much essentially in balance. It could go either way. What you would like to see is an opportunity to buy a dip before it gets up there with a target of the equilibrium line. So some kind of entry near 134 with a target of 141.70 or so would be really, really nice trade here. Problem is you've got this 139 area right here to get through first. So you may not get up to that line here in the middle. Okay. The reason I point all of this stuff out is, look, we turned the last time we hit this line. We turned the last time we hit this line. So there is some resistance up at 137.37. There's some resistance here. We sat on this area as support, and then price declined from here. So there is going to be some selling in these areas. Okay, so you want to be aware of each one of these areas on this chart. This was resistance here at 134. It should become support. Okay, this little base right below here was resistance. We rallied, and look at how many days it was support. Let me open the chart up so you can see what I'm talking about. Base, rally, and then pullback, and then we rallied through. Okay. Luca, I thought we should find supply above current price, demand below, and equilibrium would be the middle. Correct, Luca. Okay, but if you're looking at this particular chart, if you're looking for the 50% point on this particular chart, then you could go up here, down to here, and that would be equilibrium on this particular chart. So in other words, anything below here, the longs ought to work out okay. Anything above here, the shorts ought to work out okay. So it all depends on how you're looking at equilibrium. If you want to talk about equilibrium from this demand level to this supply level, then you can measure that out too. Okay? So the point I'm trying to make is if you're looking at the big picture, which is a daily chart, is one of the charts we look at for the big picture, we're still down here in the area where the longs ought to work out better than the shorts. Okay? How would you use it for trading, Luca? You're still below here, so your longs ought to work out pretty good for you. Okay, so you want to be buying dips, especially if you're below this middle line on the particular chart here. Once you cross above here, though, you're starting to run into these higher time frame supply levels, and I've only got this one marked off. There's another one up here. All right, so your shorts ought to work out better here. That would be very high up on the curve on this particular chart. All right. All right. Now let's see here. I've been scalp trading the bounces at prior resistance line with some success. Good. Well, yeah, definitely. You don't want to ignore these lines, Ed and everybody else, okay? It's not an area where you want to initiate a trade. If it gives you an opportunity to buy a dip to this uptrend back maybe to this 134 area, then hallelujah, okay? Then we get a way to join this trade, right? Luca, don't get confused about the two ways to describe equilibrium, okay? We're on a high time frame chart. The middle of the chart would be connecting this high down to this low, all right? You can look for equilibrium between this demand level and this supply level if you want, and the distance between there, your longs, you're still below. Even if I were to measure from this line down to this line, you're still down below to where the longs ought to work out better than the shorts, okay? All right, good. Michelle, what would you classify as another process to use if you cannot trade the major mean resistance like you and Sam? Well, at that point in time, the only other thing I would do is I would use every one of these areas that you see on this chart, okay, if I was long to take profits, or if I saw price dip down to any of these support areas below current price, I would use that as an opportunity to buy a dip in an uptrend, okay? So that would probably be about the best way to take the information that we're talking about here. All right. Now, Ed, I had my first green month by just taking 10 to 30 pip scalps, 50% success on those level bounces using fib retracements. So Ed has figured out a way to take Fibonacci retracements and put a set of mechanical rules around it, and now he is able to consistently take money out of the market using a little strategy playing Fibonacci bounces. As I've said to you guys, many times, whatever it takes for you to press the button on a consistent basis so that you can measure the results. The only thing is make sure that your system isn't telling you to go long into this or short into this, okay? Those will be the signals where if you're system trading, let's say, for example, Ed took a Fibonacci short right here, he would see these demand levels and say, okay, I'm getting short here, but I've got to remember there's a demand level below here, even if a next fib is below that, because if you hit this demand level, that's a great place to cover, right? Congratulations to Ed. I say this all the time, guys. The way this system that Sam uses and I use is we try to trade the extremes back to balance. So any kind of system in the middle here to where you're using this information on a shorter time frame chart is going to have a lot more trades and a lot less winners. So try to do your best to let the winners run and cut the losers short. All right. Okay, David says starting to get some consistent success too, but just by relying on supply and demand levels. That's fine. That's awesome. All right. On Forex, you trade extremes on daily charts and 4-hour charts? Yes, Francisco, we absolutely do. We look for example, once this euro started to rally like this, I'm sure, I wasn't here at the time, but I'm sure Sam had this supply level pointed out to everybody. And anybody that was a swing trader had an opportunity for a short when price rallied into this level. I know a lot of people, though, are looking for shorter term trades or intraday trades or whatever kind of trade. So if you're not a swing trader, then you still wanted to know about the supply level because you didn't want to be buying the top of this candle. Okay? All right. Yeah, Luca, don't worry about anything. Anything you're doing as far as how you understand the supply and the demand curve. We're looking at a high time frame chart, so I'm just kind of pointing out what the picture looks like on this particular chart. All right, so let's. I see price opened up here already this morning. Okay. Let's go down to this daily chart. Okay, we did the daily chart. Now this 240 chart. This is the supply level that we scored out here, Okay, we scored it out to be an 8. We scored it out to be a confirmation. Okay, the good point was it was a small level with low risk, and the bad point was I needed to be in front of the computer. Okay, if you were in front of the computer when this happened, now depending on what happened, this candle opened here, made a low and a high and a close here, and this candle rallied through. So if you were trading on this thing with a limit entry, this is a loser. And this is why you use your stop loss, because price said no thank you, and it rallied right through. What we did is we looked at this chart on a 60-minute chart, and we saw that that supply level had been visited already on a 60-minute chart, which is the reason why I scored this an 8, and we came down to a confirmation entry. So I personally didn't take this trade. All right, Francisco, for a confirmation entry, I'd have to be sitting here. I'd have to watch price go into the level, place an order to get short below the level, and then when price left the level, I would be a part of this trade. Okay? Does everybody follow that? Because Francisco's asking a great question. All right? Confirmation entry means let price go into the level, place a sell stop below the level to get short as price is leaving the level. And if you look at this 4-hour chart, price went into the level. If I placed a sell order below that line, which that line was about 135.40 or so, price just never went down, it just went up. So the confirmation entry would have saved you from taking a trade and losing money. But you still could have lost money on that chart if you would have entered on a smaller time frame. All right? Francisco, I used the confirmation entry because we had one retracement already, yeah, on a 60-minute chart. We'll look at the 60-minute chart in a minute. But you'll see that this level was tested on a 60-minute chart. All right. So this guy's gone. This supply level here is gone. So I'm going to compact the chart and see if there's anything above current price that might be some. Well, there is this supply level here, but even on this chart, we've already tested this level once, twice. So this is the third time into here. So I wouldn't get too interested in taking a short on this area, because on this chart you can see we've already been here 3 times. All right. So is there anything above current price on this chart? And the next area where there is some supply would be way, way up here. Okay, so we go up and to the left until we find an area where we have a small little rally-based drop. So that's way, way up here. So if you can clear these highs on the euro, you can rally up to that 139 level that we're talking about. All right. Hey, Rose, that's a great question. What are the clues that price was going to go through these levels? Okay, let's go down to that 60-minute chart. The 60-minute chart, 60-minute chart here, I didn't touch it since Friday. And I had a student send me an email about how to trade this strategy on a small time frame. And again, Michelle, this is again an answer to your question too. How can I use this information? Well, I sent them a picture of this area here, and I marked off the demand level, drop base rally, and I said, okay, here's what you could do. Your first target would have been right here after the demand level formed, and your second target would have been this level up here. And you can see here, drop base rally, first pullback down here. It got to his first target, second pullback, all right, rallied again, and then this candle right there, this 160-minute candle, they actually had a spike down on the news story at 7:30 in the morning on Thursday. So this candle actually spiked all the way down here, or this could have been the interest rate decision from the ECB candle. I don't remember what it was, but we spiked right back down to this level. So if you identified this level, correctly identified this level, all right, you had the pullback opportunity here, and then really this is actually a drop base rally all of its own, so you could actually score this one out to be a level too. And that one kind of turned price back. So now how do I have the idea that price is going to go through these areas? Well, again, I had some textbook resistance right at this price level here, and you went sideways for a bunch of candles and you rallied past that. And then you rallied past these two supply levels, but remember this 135.80 area had already been tested, and there were a few people that actually had this trade and made some decent money on it. And then you push through this higher supply level, and all the way, excuse me, all the way up until we're here, and then we've got this and this above us. All right, so we had supply levels all the way up here, and then we had these marked off for a while. Okay, but what happens is price is constantly moving, so when these demand levels form, that's when you got to be ready to pretty much act and take these trades. And really, you had this little drop base rally below here too. So there were a couple of little demand levels on this chart. Okay. So, and then on this new spike, this candle right here came right back into this area, and then it's off to the races. So all of these supply levels, all these resistance levels, everything has been traded through. We hit this higher one here, so we'll see what happens. We could trade in a range now between 136 even and about 137 or so, and maybe break out and continue on our way on this trend. There really isn't too much to stop us until we get above 137. And I've got those areas marked off too for when we get back up there too. So as you can see, I've got areas marked off, and roses, this is what I usually do. I find all the areas where these big moves happened in the past, and I mark them off here. Big move happened here, a big move happened here, all right, big move happened here, and a big move happened here, so I've got them all marked off. All right, and we're starting to get we're starting to get into the area where there might be some significant selling, but at the same time, if this thing bases, it's a long ways down to any kind of base. So be really, really careful here, because there is nothing solid as far as support goes. Okay, now this should be some kind of support on the way down, because we based here and we rallied. All right. All right. So all right. Let's shrink this little thing down here. All right, that's the euro. So once again, though, if we get a pullback to this 134 area, that's probably a good place to get in. Aside from waiting to get all the way back down to 134, if you go down to a 60-minute chart or a 240 chart even, we didn't even look at the 240 chart for support areas, but 134 would be this area here. Okay, and that one here, you actually tested it once already, so if you do buy anything there, use some kind of confirmation. But it pretty much flew up here, flew up here, flew up here, and right now it's just stalling in this area right here. And it's been here before. This is the 1, 2, 3, third time now. Okay? All right. Okay. All right, that's the euro versus the dollar. Let's look at some of these other currencies like euro yen. Again, there's really no opportunity for any kind of carry trade with euro yen. The interest rate differential isn't that big. Let's see here. That was the weekly chart. Daily, weekly, okay. And this one here, around 130 is a drop base rally. So around 130 is a drop base rally. And here on this weekly chart, there's that one little candle right there, that one little base. Okay, so this used to be some kind of support in the past. And so you see how it was resistance here the last time we were up here, which was at the beginning of the month of April. So you don't want to ignore these, in other words, on the way up. You may not want to use them for opportunities to take these trades, but if you're long for whatever reason, you want to make sure you take your profits over there. Okay, so keep an eye on that. And yeah, we have a tiny little bit of a gap up on some of these currencies, not a lot. Not a big movement on some of them. We are in some kind of a little resistance area here. We're getting close there. So as you can see, since we stuck that candle up here, there might be some support down in this 132 area, which is a round number. It should be support anyhow. So maybe 132 you want to keep an eye on for some kind of support. 132.15 or so, maybe 131. Actually, if you go all the way down here, you could hold off into here. With this drop base rally, it would be closer to 131.75. All right, and then you've still got this resistance up here, which is actually what happened when we visited this area that used to be support in the past too. But the next real supply level is way up here at 154.28. All right. Yeah, I'll get around to all these currencies, I promise you, since it's trading and analysis. All right. The last opportunity, really, though, for any kind of pullback in this uptrend was when we had resistance here in the past, and I don't ignore these areas. I use them for profit targets. I use them for moving my stop loss. I don't ever ignore these areas. It was resistance in the past. Okay, it was support in the past, resistance, and support again in the future. Okay, now once I get down to smaller time frames, I can look for a base to make an entry at, but I don't want to ignore these areas anyway. And there should be some kind of resistance at the top of this wick too. So still some sellers in here. All right, that's our daily chart. Our weekly chart, again, really looks like it's trying to break past this resistance area, and if it does, it's pretty clear sailing all the way up to this 155 area. All right. Yeah, I see my connection's not the greatest, so I probably sound like Donald Duck, but at least my mouth feels better today. So I can live with sounding like Donald Duck. This was our last little resistance area here. And we kind of bumped against it and sold off and then rallied past it, so this is gone. And our next real quality supply level is way, way up here, 136.20 or 60 or so. Just going to put that there to see what that price is. 136.70 or so is the supply level up there. And see this area rally base drop right down into a drop base rally, all right? And then finally we pushed past it and we rallied through, so this area is gone. Okay, but since we rallied past there, we probably find a little bit of support on this area right here on the way down. So again, you don't have to wait for price really to get to the extremes. If you can identify the major trend, and but right here it looks like it's a downtrend. Identify demand levels below current price, and then if one of these areas forms and you want to buy a pullback to it, in the context of a trend, that might be a halfway decent entry. Obviously, the best entry on the chart here, folks, for a swing trader is way, way down here. And I show you this picture over and over again, drop base rally and that pullback that happened shortly afterwards. But it doesn't mean that you're going to catch it unless you're actually watching the chart or planning for that trade. Yeah, David, that's a long ways down, right? So we got to look for areas to enter above there. Hey, Rose is saying, do you mark prior support and resistance from larger time frame down or the other way around? How do you use them when you're deciding to make a trade or not make a trade? Here's the best way to use them, Rose. We're on the 240 chart, right? So this base of support formed on 212. So I'll look at those candles and I'll look for the dates on there. And every one of those candles is from 212. So what I'll do is I'll go down to the next time frame down, which is probably a 60-minute chart, and I'll look for a demand level inside this level. Okay? Can't say this enough, because when you have a lot of losers, it's usually because you're taking demand levels on smaller time frame charts that just look great, but they're in the middle of moves and they're not really, at extremes. So this demand level here, oops, you would want to take an investigation of something like that on a 60-minute chart or maybe a 30-minute chart or something to see if you could, find a smaller base to actually enter on. But that would be on a 60-minute chart inside that level. Okay? All right. So here's what usually happens. That's a 240 chart. Let's go down to a 60-minute chart. Okay, now we'll try to find that base from 212 because this is a good question here. All right. So when you look at this from 212 here, it's it's a funny looking base. It's a drop, kind of a little rally, then a big base, then a drop, whatever, and then price kind of turning here. You might see something like this and say, there's nothing here, I'm not going to trade it. It looks good on a 240, but I can't make anything out of this thing. So you pass on it when you look at that. But at least you're looking for a base inside of a higher time frame chart. All right? There's bases all over the place that form on every one of these charts. This one's a base here with a pullback. That worked out fine. You can find them almost everywhere. Okay, just for example here, this one here, without actually looking to see if it's inside of a base, here's our pullback over here. Okay, depending on where I had my stop loss, that could have been a winner or a loser. If they're inside of a higher time frame bases, then they usually work out better. All right, Cassandra is asking a quick question regarding Euro 1 hour chart. Looking at current price, did you say that the next supply level is 136.50 to 76, and above there is supply at 37 to 71? Just take a second to buzz past there. There's actually two levels that we were inside of that were like on top of each other here, Cassandra. Okay, and again, you had a supply level between 36.50 and another one at about 36.80. These are two supply levels right on top of each other. Now this one here, though, you could see we tested that supply level back on 324 or 325. Looks like 325. We tested this supply level here, the one we're in right now. And above there, though, let's open the chart up to see what it looks like. Let's go back to the past here. All right. So we're bumping our heads against, that might not be it. 136.50. Yeah, 136.50. So this is what we're bumping our heads against now, and then you've got this little one candle rally base drop above there, that 36.83, where we had a nice big drop from there. So there is another supply level above there. Okay. This one's been touched already, like I said, back here in the past, and we're bumping up against it again. All right. The reason I put this line here, actually, I'll take it off. The reason I put that line there was because the low of this candle here might be, if this thing sells off, that might be the low here. Otherwise, if it doesn't hold that low at 136, it's probably going to fill this whole gap down to 135. Or 135, yeah, just about 135. All right. Okay. Okay, hold on here. Okay. Yeah, but above there, once we're clear there, those levels here, which are, again, nothing really great, speed bumps more or less. Once we're above there, we don't have anything. This whole mess here is, we've touched this a few times, so I wouldn't consider any of this to be anything more than speed bump stuff. Really don't have any supply until we get way, way up here, where the origin of this big drop at 139 or so. But we did have this old support here at one time at 138, 138.40 or so. Used to be support in the past, so it might be resistance in the future, but no supply level, still much higher up. All right. All right, Philippe. Okay. Philippe's asking, if there's time, could I go over how to get the interest in the trade after you miss the optimum entry? Is the only way to look for a pullback in a smaller time frame chart? Is there any way to have Forex sessions between 7 a.m. U.S. and 10 a.m. for the U.S. Open, especially useful around 8:30 data releases? Yeah, that's not a bad idea. We should do a few of those sessions too. We should try to do a few sessions where we're going to trade the U.S. Open. Since you brought it up, as a matter of fact, on the 21st this month, May 21st on FX Street, I'm going to do a U.S. session trading session. I actually said to them, we're going to trade the U.S. session, and I'll get you a link for it, and I'll post it here in a little bit, probably in the break. We're going to trade the U.S. session at the open of the session. If it's a news day, we'll trade if there's any kind of news releases, if there's any kind of action at all. We'll trade with Fibonacci's, we'll trade with a bunch of little things just to try to catch a session, again, when there should be a little bit of action. But we could have a session like we have a lot of times in the European session where there's nothing going on and prices are just flat. So if that's the case, we'll trade that too. But that's one opportunity. If you're all welcome to attend, okay? It'll be on our website, on the OTA website, I'm sure, a link to it. But I'll try to get it I will try to get it before we end the session today because they just sent me the link. All right. Let me catch up on my questions here. And that'll be exactly what we're doing, data releases, etc. Okay, supply and demand levels on smaller time frames that are not inside of a supply and demand level on a higher time frame should be ignored or just not taken as seriously as the ones on the smaller time frame. Yes, Rose, that's exactly correct. So in other words, this is a 60-minute chart, okay? And that supply level that's up there, I would consider a 60-minute chart to be a decent time frame for looking for a supply or demand level, right, by itself. If you go lower than a 60-minute chart, like a 30-minute or a 15-minute, you're going to see levels everywhere. And that's where you're going to probably run into problems because they'll look great, but they may not do the trick. All right, so really want to be careful on those other levels. Okay, so we'll find some, for example, here in a little bit. One thing I'd like to do if we have an active session is, and one day I'm going to do this too. We're going to sit here on a 5-minute chart, and I'm going to mark off all the areas above and below current price that I expect prices to bump their little heads against. Like up here in this 5-minute chart, this is a nice drop. All right, this is a nice drop. This is a nice drop. There could be reactions to every one of these single things, but that doesn't mean I'm going to short every one of them. All right. If I'm long, though, if I see one of these red lines coming up, I'm going to realize I'm coming up into an area where there's probably some supply that I have to be careful of. So here's a demand level on a 5-minute chart. Maybe by the end of the day today or tomorrow, during the U.S. session, price will pull down to this area. But it could come right to this little old resistance, new support line in reverse. So that's the thing, though. You have demand levels and supply levels all over the place. That's a nice move there. There should produce a bounce. This should produce a bounce. Okay? And I can show you little areas here. Here's a little supply level here on a 5-minute chart. Look at it. Price came up here, based until it absorbed the supply, and then it rallied from there. And then on the way down, it became a little support area on that reactionary candle. Okay? So some of these areas here, if you're trading on a 5-minute chart, you can expect bounces on all of these things here. You just have to be ready to close the trade if you trade below these lows, because that means there is no support and price is going to go lower. All right? But now what we're talking, of course, is bounce trades like Ed's taken. All right? So anyway, that's fine. Let's see what we have here. Hopefully that answers the question, Rose. If any of these are inside of a 60-minute level, which I'm sure if they're not, they're all by themselves, and the 60-minute candles are just pretty much all green candles going up, green candles going up. So these little demand levels here, which are perfect, they're picture perfect, they're gorgeous, and every single one of them might produce a bounce. This might produce a bounce even before you get here, this little old resistance, new support thing here. This could produce a bounce before you get here. This could produce a bounce. But if if you want to use them if you're trading on this 5-minute chart and the market's moving and you want to try trading bounces on there, go right ahead. Okay. All right, let's move on here. We move down the list on the questions. Questions are coming fast and furious. Yeah, Rose, I hope you guys can attend that session, that US session, because what I'm going to do actually is throw Fibonacci's on a chart. I'm going to throw trend lines on a chart. And of course, if I see any of these levels, you know I'll be buying. Right? All right. So we'll trade the U.S. Open. It'll be the free, the premium, not the premium rows. It'll be the freebie. The premium session's actually going to be on something else. So I'm going to do that on the, what did I say, the 21st. All right, Richard. When you are swing trading, how many pips above the highs and the lows of the level do you place your stop? When I'm swing trading, I usually use about 5 or 10 pips, Rich. Okay. Okay, very good. Philippe, thoughts on this? Could you cover again how to get into a trade after you missed the optimum entry? Okay. The optimum entry. The optimum entry would be, for example, okay, here I marked off all these nice little demand levels below current price. Okay? So, demand level here, demand level here, demand level here. Here was the pullback, here was the second pullback. All right. So, you know, the first pullback is the optimal entry. The second pullback, I got to be careful because, you know, price might bounce here, it might not. As it was, it bounced, and then all of a sudden it went down and it made new lows. And it actually got very, very close to this next demand level below here. Then it made this demand level. When it did that, it made another demand level when it did hit this here. And then we had this big move up here. So what I usually do is if I miss the optimal entry, okay, I'll mark these areas off and I'll look at them as possible entries in the future. But it's a strategy I've done before many times. But you see how busy it is. I mean, I'm marking off supply level, supply level, supply level. I mean, I got millions of them on here. If you actually sit and watch the market during these times when these prices come up to these areas, you know, you get your bounces, you'll get your pips if you want. Right here, look at that one candle there. You can't barely see it because it's buried behind here. But where is it? This guy right there. At one point in time, that was a big candle rallying right up into the supply level. If I don't have that supply level marked off and I see that great big green candle, you know, what am I doing? I'm going to get all excited and jump all over it, right? Okay, I marked these areas off, all right? And now it's a 5-minute chart, so I don't expect it to work the second time. I don't expect it to work the third time. It's a 5-minute supply level in the middle of nowhere, right? But just as easily as I do this, you could also do those Fibonacci lines like Ed's doing. And you really don't, you know, if you find any of these supply levels and they line up with a Fibonacci level, that's great. What happened when this formed here? Big rally base drop here. What happened in the future when that formed? Okay, let's see what happens. That's 133.50. Okay, I got to pay attention to these things when they form. All right, it produced a pullback or a sell-off. So they'll work on these little 5-minute charts. It's just you can't expect them to turn into swing trades. You know what I mean? You can use them for what they are. They're bounces. You sure don't want to be opening up a long position into one of these, right? And then these little tiny levels here, they formed. Rally base drop. Here's another rally base drop. What happened when they price hit them in the future? Okay. Okay. They produced a turn. This one didn't produce any kind of a turn at all. Look at that momentum candle. It just drove right through it. And then this supply level here got taken out. And it drove right up to this higher supply level. So, I mean, you certainly can mark off every single solitary area on these charts. It doesn't mean you have to open up trades on every single solitary one, but you sure want to be aware of them, right? So it's good exercise, though. What's the best way to get good at finding levels? Mark every single solitary one off on a small time frame chart, and then sit there on a demo and spend a day watching the market if you have the time to do it. Watch them hit these little levels and bounce off. Okay. All right. So the optimal entry, I don't know if I answered that for you, Philippe. I would say probably the best thing for the optimal entry would be if I missed an opportunity and there's some kind of a base in a rally, I'd buy some kind of a pullback. Okay. I would buy some kind of a pullback. That would be, unless you want to take the actual breakouts themselves. If you want to take the actual breakouts themselves, they're more dangerous, those trades, but they could work out for you. Just like this 30-minute chart here, it's the way this thing has been rallying, it could bounce on this 136.20 area, based in rally here. It's not the best place to get long after a big move up like this, but if you are looking for some kind of a bounce or something, you can try it. Just be prepared to close the trade if it doesn't work. We're here now. This supply level's gone. Most of these supply levels here are all gone. This is all done. Just got this guy here around 137 or so. All right. Starting to sell off now. The other day when we were in the MIT room, there were a lot of people, and now they want to trade active. Okay, so I was in there on Friday, and those people want to trade. They want to press buttons. So I said the same thing. Go down to a 15-minute chart, mark off some levels, and if price comes into one of those levels, and you want to take the trade, take the trade. So the only one that we had, and actually it wasn't me who found it. I want to show this to you. It was one of our students who found this level. She sent me this level in an email. She said, what do I think of the level? I said, I like this level, but I like the higher one better. Okay, but it certainly was a decent level. And so first thing on Friday, rallied right up into here. She got short. And so she had a nice trade. And this was actually her target. This was a demand level here. It's just about to collapse, it looks like. But there you go. I mean, this was a 60-minute chart. This was her trade. This green candle right into here. So if this happens on a currency chart, on a 15-minute or a 5-minute or whatever, yeah, you can get as active with this strategy as you want to. All right? So I just wanted to show you that because that was the focus of what we were doing on Friday. Everybody wanted to trade actively, and you're gonna have to understand something here. I'm all for trading actively, but I'd like to do so under a kind of controlled situation, if you know what I mean. In other words, I'd like to buy a pullback to here rather than just say, I think I'll go long because the euro's up here, So that's pretty much my discipline. So in other words, as a disciplined trader, I'm supposed to sit here now and wait for price to hit this level. And while it's up here, I'm not supposed to do anything. That's just the way I trade, though. Okay. All right. Cal's asking, is the percentage of the ATR a good way to place a stop when opening a trending trade? Well, Cal, you're trading highly leveraged products. I could say that might be a good thing to do if you were trading a stock where you're only using 50% margin, but here you're going to use 100% or minimum, probably more. And ATR could cost a lot of money and drain your bank account before. I wouldn't use ATR if I were you. I'd draw some kind of trend line if I wanted to place a stop. Ahead of using the ATR, the daily ATR for sure on some of these currencies. Again, a lot of that depends on your account size and a few other things too. So, but like when Investors Business Daily tells people to place an 8% stop loss below their purchase point, that would just about be a big piece of your account. You wouldn't have anything left to trade if you took that big of a hit. Okay. All right. What happened to Evan? Haven't seen him in weeks. He pops in and out. Ed, he was here the other day. Stan, the small time frames clutter the picture. Right. So in that case, you just find a nice demand and supply level on a 60-minute chart and just wait. Wait till price gets there. Okay. Steve, given where those demand levels are in the 5-minute high on the curve, should you only short Cassandra? If I was coming into high time frame supply, then I probably would pull my real high time frame supply, something significant. I wouldn't take the areas that are that close to price. In other words, the 60-minute chart that we're on now, where we're at, this is a supply level that we've hit once already, like we said. We hit this area actually more than once. So it could definitely, it's slowing price down right now. But this higher one here, this higher level here, which is 36.85 or so, this one's around 36.30. We could get past this one and get up to this higher supply level. So what I'm saying is, if I was trading on that 5-minute chart, down on this 5-minute chart, for example, if I was worried about it, I'd pull my bid and just fall back to the next lower level below there, just to give this thing a chance to pull back. But that's all the way down to 35.80. This is closer to 36 even. All right. So it's entirely up to you. You are near supply, and this one could go away for sure. As a matter of fact, all of these have to go away before you could have a downtrend move. So in other words, every one of these areas has to be taken out so that if there was to be a downtrend, you could have a downtrend from here. So we'll see. We could bounce on this one. We could trade through it and bounce on this next one down here. All right. Francisco, first start with the big picture, identify levels, and then go to small time frames to identify entry points. Right, Francisco. But make sure that if you're looking for smaller time frame entries, for example, here's the thing. On this 5-minute chart, you've got 1, 2, 3, 4, 5 little bases to buy a pullback to. As soon as I go to this chart here, there's nothing. There's absolutely nothing. None of those bases are here on the 60-minute chart. So you don't have any place to buy any kind of a pullback to until you get way down to 135, all the way down here. All right? Now, obviously, this thing may base up here between 136 and 136.40 or so. It might go sideways inside this range and all of a sudden bust out through the top and start to go higher. And it'll never come back down to this area. So if you want to be a small time frame trader, what's the trend right now? I mean, the trend on this chart is up. The trend on this chart is up. Right? The only problem is you're in these supply levels up here to where, you got to be kind of careful. But you might get a bounce on one or two of these small time frame areas for you to be able to take a trade. If you're looking for 20, 30 pips, it's a demand level below current price. You might get it if you get an entry here at 36 even and get out at 36.40 or 50. This is 36.50 here. All right. Depends on what you're trying to do. If you go to a 15-minute chart, though, if that's too busy, then you could say to yourself, I'm looking at this 15-minute chart here. Here's what I see. I see a little demand level right here. If price pulls into this area here, I'll buy. All right. And remember, this is near 136, so you're near the figure. It's a drop-based rally. Your distance to your target up here is up here. So you could say to yourself, if price comes in here, I'll give it a ride. We'll see what happens. It may or may not work. All right. But if we had a fresh supply level up here, I would tell you forget about it. But we really don't. We don't have a fresh supply level till we get a little bit higher up. We've got this area here, which we've hit quite a few times already. So it's up to you. The only reason, again, I'm bringing this up is it's the same argument that we have here every time I do the futures. Okay, this is a supply level on the S&P 500 that we rallied into for the first time. So a lot of us were short this thing. All right, this is the second time up to this area. This may or may not turn price lower. Okay, look at what we dropped down here to this little support level here. here on Friday, the whole time I was in the MIT room, I said, watch it, because these prior lows might hold as support for the day, for the S&P 500. And the same thing with the NASDAQ. Here was a supply level up here, and the demand level way, way down here. Okay, right here was the demand level, and at 1380. So we bounced off 1380 2 days in a row now. All right. So again, though, we're near high time frame supply on this S&P 500. That's the reason I'm bringing it up. On the S&P 500 on a weekly chart, we're trying to rally past this supply level here, and then we've got this higher one here. So there's people. I mean, what happened on Friday? I mean, everybody was the market closed on the highs on Friday. Understand I have sell orders in on quite a few things for. I've got stop losses, let's put it this way, because we still are on those high time frame supply levels. All right. All right, Cassandra. Let's see. Jason, use larger time frames to reinforce the 5-minute charts. Yeah, Jason. So in other words, just to be on the safe side, pass all those little 5-minute levels, but if you get a pull back down to this 136.10 area or so, you might want to try that. It could produce a nice turn, or it could produce a nice bounce again. That's if we sell off today at all. Who knows? We know there's no password for the U.S. Open. I'll send you the link. You can just get in there. Okay. The 21st, I believe, is when that's going to be. On May 21st. It's going to be, I think, starts at 8:30 Central Time. Yeah, you're going to hear my voice go squeaky every time the connection gets a little bad. So some of you have already got bad connections, so I probably sound like Mickey Mouse. All right. No, Jason, 99 on, I'm not quite sure what you're looking at. If you want to tell me which currency that is at 99, if you're talking about the yen, we'll take a look. For sure, we'll get down there. Philippe, so the only way is small time frame pullback to get in trades if optimal entry is missed. What about trend lines, Philippe? Yeah, you can use a trend line. You certainly could use trend lines, no problem. You know, like trend lines like this, to where you've got, you know, you had opportunities to short based on the angle of the trend. Excuse me. But here, the angle of this thing is so steep that I would use some kind of a bounce down to, you know, a base below me before I would use a regular vertical trend line, because the angle is so steep. All right. Okay. Excuse me. Cassandra, okay, no problem. Yeah, Wednesday the 21st. Okay, yeah, we'll see you all there. And what I'm going to actually do, I mean, I'm going to pick a currency, maybe maybe this guy here, and you know, here's this guy's trying to break out, but there's no volume right now, and or I should say, there's hardly any participation here. But if price were to close up here, close above this area here, you know, it would actually have formed a little base and a rally. All right, and if you're on a 5-minute chart here, and you wanted to buy some kind of a dip to this area, you could, with a very, very tight stop, because if it plows through here, it's probably going to come down and test a little bit lower. But again, the overall trend on this thing is up. It is in resistance, so that's a dangerous trade. Me, myself, I would, if I'm going to trade, I'd go back to this guy before this guy, or this guy here. This one's the best one of all, because of the nice rally out of here. So I'm not even going to consider this guy, but they form like this, and when they form, that's your next, you know, it's not the optimal entry, obviously. Okay. All right. Luca, let me see. I use 60-minute to find fresh support and supply and demand, and I draw equilibrium. Then I switch to a 5-minute. Longs. Longs near demand, short near supply as the level forms. Equilibrium and around is a no trade zone. Good. Okay, Luca, that's fine. That's absolutely fine, because on a 60-minute chart, then of course your highs and your lows and your equilibriums are going to be quite a bit different. And if you're successful at doing it, okay, then don't change it. And as far as trend lines, again, Philippe, here you've got a place where you could draw a trend line and possibly buy a dip because prices aren't going straight up, right? I mean, here's a trend line based on this low and these two lows here. So if it did dip down here and you bought the trend line and it closed above the trend line, then you could place your stop loss just below these pivot lows. But that's probably be the same thing as buying a dip to a base. Okay. Okay. Rose, will I be covering a no trade zone anytime soon so I don't miss it? Yeah, we could pretty much cover it this way. All right, so on this particular chart here, all right, I'm going to say this supply level is done. There's a supply level up here. So if I was interested in trading, let's face the facts. After the big move that this currency had on Friday, I wouldn't be surprised to see it consolidate some gains. So it could rally up to that 136 level, but then from there it's probably going to form some kind of a trading range. All right, so the no trade zone, whichever way you want to do it, would be to trade from this demand level down here, because it's the only demand level here, up to that supply level. And when it's in the middle here, you really don't do anything until it gets up to your supply level. Then you go short, or down to your demand level, and then you go long. And no trade is when it's in the middle of the chart, depending again on the time frame that you happen to be trading on. That's pretty much what it is. In other words, the way I explained the strategy at probably the beginning here, if I'm trading on this chart, I'm long here, I'm short here, in the middle I'm doing nothing. To me, that's considered to be a no trade zone, as soon as this thing is in between here. But remember, what are we looking at here? We're looking at a weekly chart, which means that, you know, I wouldn't do anything with this euro until it either came up to this supply level or down to this demand level. But now it formed a demand level really here on this weekly chart too. So if I wanted to buy a dip to this demand level, and that would be what I would do. Depending on the chart I'm trading on, I'm either selling near supply or buying near demand. And the no trade zone means as long as it's in between the two areas, I don't do anything. And that's, you know, that's going to leave you with very few trades if you're trading strictly on a weekly chart. Okay, so hopefully that explains what the no trade zone is. Cassandra, that's a good question. It depends. I like 15-minute because the bases ought to be stronger, but I get more action on a 5-minute chart. So I'll trade either one, really. But personally, I like 5-minute charts because you get a whole lot more action. But 15-minute charts, if I'm trading maybe the British pound, I'd probably want to use a 15 versus a 5. All right? Yes. Sam mentioned no trade zone, equilibrium between nearest supply and demand. Yeah, pretty much. Thanks, Rose. Yeah, that's pretty much it. Hi, Steve. Do I have a top-down approach? Pretty much starts always with the weekly chart just to see what the likely possible ranges could be. Cal goes down to the daily chart to see the nearest demand and supply level above and below current price. Actually goes down to a 240 chart, and I'll score out the level that I want to trade at on this chart. And of course, if I want to try to, for example, if I find a level like this and I want to kind of improve my odds, I might go down to a 60-minute chart and look inside a 60-minute chart for the entry spot. But this one's been hit so many times and we're pushing into it again today, I would not be interested in shorting it again. And on this 240 chart above there, there's some pivot highs, so there's probably some selling above here. But you can't see anything here until you go back to the left and look for the next area of supply above there. And I've got one marked off here that I'm interested in based on at around 138.95. So this is really the next supply level I'm interested in if getting short the euro versus the dollar. And using the odds enhancers and everything, time at the level, very, very short period of time, move away from the level. Okay, big picture, it's up near the higher time frame supply areas. This one I'd probably score out to be a 9 or a 10. All right, so that's a nice looking level up there. But this other stuff here that we're in right now, we're just about past it. So, okay. Ooh, Michelle, does this work well on 1 or 2 minute charts, or is more stable on a 5? I think 5 would probably be the teeny tiniest area that I would look at for levels. But you know, it's funny you ask that, because sometimes you'll get a level on a 2 minute chart, which I use the Bollinger Bands on. You'll get a little level on a 2 minute chart, and it'll mess me up as far as it's happened before. For example, let's just see here. You have this drop base rally right here. So if I saw this, and I wrapped a couple of lines around this, you know, now it's only a 2 minute chart, right? So I'm not expecting miracles if price comes down there, but you know, close, and then finally traded through it. Okay, so even these 2 minute charts, a lot of times, good thing about it is, of course, is you're going to get a lot of opportunities to actually take trades on a 2 minute chart or whatever. But drop base rally, so got close a few times. Let's put a couple of lines around this guy here, see if this thing produced any kind of bounces. Same thing. Prices dropped, they based for about 4 or 5 candles. Okay, then they rallied, they got up to there. So let's see what happens here. And one bounce, and that was it. And after that, it traded below. All right, so you can't get too thrilled about them. Let's say I like this guy here for a supply level because it's a rally base drop. Just the opposite picture, 2 minute chart. So I put a couple of lines around this guy, and I want to get short if I get the signal from the Bollinger Band system. Okay. If you took it the first time, you did okay. If you took it the second time you lost. All right, so. Okay, so even on a 2 minute chart, Sam will do this on the S&P 500 on a tick chart. Okay, we don't use tick charts in here, but we could certainly look at them if you want a lot of activity. Anybody that has TradeStation, of course, would be able to get a tick chart, no problem. Let's just convert this guy here to format symbol. Tick. This is a 233 tick chart. That means every time there's 233 transactions, you get a new candle. All right. Now, as far as levels go, this looks like a perfect drop base rally and a couple of bounces off of it. Here's another drop base rally. All right. So just wrap a line around that. This is probably the equivalent as far as time goes to a 5 minute chart. Okay, so you can get, you can make these candles out of anything. Can't make them out of volume in the Forex, though. All right, so that's a tick chart. And of course, you can make the format the symbol, and you can actually go higher if you want. 500 ticks Sam uses. So this is what it would look like on a 500 tick chart. And then, of course, there's more data on these charts. And okay, demand second time into the level, lower demand levels. They don't all work. They're not going to. Some of them do. This one produced bounces. and then these got traded through. So. But you know what? You take a picture like this right here, right? Rally, base, drop. And what'll happen a couple of times though is it'll mess you up as far as your entry, because your Bollinger Bands won't get wide if it's got this area here. But rally, base, drop. There's a first pullback. Here's the second pullback. And again, if you were trading with the Bollinger Band entry, you're okay. And then you got that spike candle, so came down to this lower demand level. So it's just practice finding these levels as they form, and try it on a bunch of different time frames and see how you can do. But I use these with this Bollinger Band system. I use trend lines with the system. So in other words, once I break out into some kind of a trend, I'll draw trend lines. And if the angle of the trend gets steeper, I'll draw steeper trend lines. And if I'm taking that trade and I break that trend line, the end. So hopefully that answers your question, Michelle. I'm not sure what violates the equilibrium rule, but again, when we talk with Sam tomorrow, Sam's actually going to be here. I make sure that everybody writes down any questions you have on equilibrium, all right? And we'll make sure we get it from Sam too. All right. What do I mean by be careful, Jack? Just use your stop loss. When I say be careful, you're trading highly leveraged products. You're trading a product, if you stop and think about what you're really trading here, you're trading a product where someplace on the planet somebody could dump a big order to go, buy or sell whatever you're holding. And that's what's really going on in these markets here. So you want to make sure that you're always using some kind of a stop loss, logically placed stop loss. Because at the bottom line, no matter what, you can have price fly through these areas. Okay? Francisco wants to look at a dollar-yen chart, so we'll definitely do that right now, Francisco. 60-minute, there's a gap next to a demand level. Here are my comments. Oh, wow. I'll tell you what, there's a gap, so the origin of the gap is right here, and that's all we really need to know. If we fill that gap at 98.50, that might be a nice opportunity to go long. This one down here, drop base rally, this formed on this 60-minute chart when this candle closed above that base, and these two dips so far have been like golden. And your target's going to be 99.50 because you got a nice supply level up here, which is a brand new supply level too. All right. So yeah, this gap up here. Now, if you could get lucky and get a pullback, question is you've got this level here, and you've got a level below it. So where do you place your stop? Well, you don't want to be risking 50 pips to make 100. That's a 2-to-1 trade. So I would probably put my stop loss, if I did take this trade, I'd probably put my stop loss below that low. And this should be a good level, but that's a nice looking area. And that's not too bad of a gap up. Didn't go very far. Got up to 98.80. Okay. Yeah. Jason saw a nice small demand level off the 15 and 30-minute charts. Yeah, Jason, you should be pretty happy now. Your Aussie is breaking out against everybody, so yeah. 21st is Thursday, Rose? Okay, yeah. Break time. Yeah, you know what? I don't have my watch here, guys, and I'm sure we probably ran over. Illuminate likes to freeze the charts here, so good idea. Why don't we take 10 minutes? 10 minutes from whatever time we're on right now. And and then we'll get back to answering all your questions. All right, and we'll see if we can find any decent opportunities. Not too many swing trade opportunities right now, but plenty of intraday stuff, lots of action. So whatever time it is right now, we'll see you back here in 10, starting right now. Okay. All right, so we're back from break, folks. Thanks. And I'm going to start to share the desktop again. So you should be seeing TradeStation really quick with a green check mark. Okay. Awesome. Super. Okay, so Philippe, yeah, you guys have been asking some great questions here. Philippe's asking about trend lines again. Wait until it goes below and crosses back above. Actually, Philippe, depending on who you're talking about that uses trend lines, we don't usually wait for it to go below the trend line and cross back up. You actually draw the trend line, and as long as it does close above the trend line, okay, then you could buy it. Now, this was something that, depending again on who you're listening to with trend lines, Barbara Rockefeller, who I used to listen to when it came to trend lines, she would wait for price to probe the trend line. It would actually have to physically touch the trend line and then close above it. And then there's a gentleman by the name of Martin Pring who's written books on technical analysis that just says if you close above the trend line, he considers that to be a successful test of the trend line. Pretty much the same like you do with a moving average. So in other words, you just close above the moving average and some people will go long the very next bar. So some of you are asking some great questions here about the 50 moving average, which I'm just going to insert a 50 EMA here real quick. Take me a second. Okay. All right, so if I insert a 50 moving average like this, if price just closes above the trend line like at this particular candle, then some people would go long the next candle with a stop loss below the moving average. All right, so a lot of people use this a little bit different. Same thing with the trend lines, though. Some people have to actually physically probe the trend line. Others say if it just closes above the trend line, then it's considered a valid touch or test of the trend line. All right. Close above the trend line either before not actually touching it, Philippe. Depending on if you're going to use Martin Pring, like he would consider either one of these two candles here that closed above the trend line to be okay, and he'd buy it with a stop loss below the trend lines. Right. So no, Bruce, I don't use a 60 EMA. I personally use a 30. Sam uses a 50 for his trending system. He uses a upsloping moving average and a CCI. So in other words, if you got an oversold CCI, he'd buy this dip, even though it doesn't touch the trend, or even though it doesn't touch the moving average. All right. Brandon Wendell likes to use a 60 for his scalps. Thanks, Jimmy. Yeah. I thought I use a 30 moving average. I use a 30 weighted moving average, Zen. Okay. But I use that for the 4 stages. Sam uses this 50 moving average with a CCI or a stochastic. So if you were to insert, for example, we'll do stochastics because you've all seen CCI probably enough. If you just insert a stochastic oscillator down here, if you get an oversold stochastic and you come down to and you close above the moving average, he would take that for a long signal. That only works if you have some kind of an uptrend and you get extremely oversold to where you're actually going to get an oversold pullback. So this is more of a trending system. All right, and this trending system, of course, could work with trend lines just as well too. If you get an oversold oscillator and a pullback to a trend line, that would be another confirmation to actually take a trade. All right. Okay, good. CCI settings does he use? Eli, I personally use the default settings, which are whatever trade station comes with 14, I believe, is the settings, and then plus and minus 100 for the overbought and oversold. Now here, you're getting an oversold oscillator, but you're below the 50 moving average, so if you wanted to use this, there is no trend. The moving average is sort of flat. If you got an overbought oscillator with a downsloping moving average, then you could short a rally into that moving average if you want, right? Good time frame to use for a trending system, Victor. Obviously, the higher the time frame, the more obvious the trend will be to more people. So 60-minute charts are fine. Higher time frame charts. Every one of these indicators, oscillators, all this other stuff was designed to be used on daily charts. So if you're using them on any time frame chart, the higher the time frame, the better. All right. Okay. Let's do this. I want to try to get through as many of these currencies as possible. Since we're on the end here, you've still got this speed bump resistance here that is holding this back at about 100, but you've got this trend line here, so you're still technically in an uptrend. So there's really no base to buy a pullback to, but if you come back to this trend line on this weekly chart, it is a nice little uptrend here, so yeah, that's one opportunity. How about if we find a base to buy a pullback to on a daily chart? The closest base on a daily chart might be this guy right here, which is just about at 96.80 or so. All right, and we've still got this 101.50 area that we've got to get past here that's been holding us back. Okay, so at this point in time, though, we're just kind of basing here. We haven't talked about this kind of strategy, but we're basing here, and we could possibly break out to the upside because we're starting to make higher lows as we're doing this basing here too. So anyway, breakouts, it's entirely up to you guys. Anybody that wants to take a breakout, of course, there's a million ways you could do it right here on this particular chart. But notice these higher lows, I'd be very careful taking any kind of a breakout to the downside. I'd be careful taking any kind of a breakout anyway. But here's our 60-minute chart. You know, you've got this demand level right below here, and another one below there too. So my money's on the longs on this one. And your first target's going to be this rally-based drop at about 99.40 if you're going to take that trade. Okay. Let's look at the Swiss. Thanks, Rose. Have a great day. Anybody that has the boogie, no problem. All right, so weekly chart. This is the key, folks. Rally-based drop, right? Pullback. And we sold off from there. Now we traded below this textbook support area. So the next area below current price is 107.88 or so. So that would be a support level down here. Okay, so that's possible that we could retrace that. We'll see. So if we go down to this daily chart here, this was a demand level. It held price up for all this time. It's gone. But you've got this tiny one right here, drop base rally, just at about 110. So, you know, it's an even number. There might be some support there. Okay, and then it should come back up to this area that used to be support in the past, and it could be resistance. It's got, let's put it this way, the path of least resistance really for this particular currency is down. It could probably take this demand level out like it took this one out, and then probably go lower from there, all the way back down to here. The dollar's in pretty seriously bad shape right now. Okay, so we've had a couple of these areas marked off from the last couple of sessions we did. We had this little rally-based drop that we kind of ran into a couple of times at 114. Never got back up to this guy, couldn't get past this guy, made this guy but never tested it. And down here at the bottom of the chart, where we're at right now, is this demand level here. And that's at about 109.60. So we do have a demand level on the 240 chart, and then we've just got support areas below there. Nothing, no demand until you get down to 104 or so. All right. Now the 60-minute chart, we had this drop base rally that we tested several times. No more buyers. This is what it's all about, though. You know, you tested these demand levels until the last buy order was filled, and now price is going lower. Okay, so, you know, and then this, I missed this guy here, but it was on my other chart, but we had a rally-based drop here above current price. I haven't been trading this dollar Swiss. I've been trading the dollar versus the euro instead, but I've been charting this thing for supply and demand levels. And below 110 there, you got a couple of bases here. Now these are 60-minute bases around a little bit above 109. But on the 60-minute chart, if this doesn't hold here, you could drop all the way down to about 109. And then you've got the source of this big move here, which is closer to 107.60. So that's what we got below and above us right here on these particular charts. Okay. All right, so that's the dollar versus that. Let's look at the Canadian. Linear regression channels, Zen's asking about. You know what, Zen, I used to use linear regression channels. The only problem I had with them is this TradeStation. Let's see if this is the regression channel here. TradeStation's regression channels are 2 standard deviation channels. I don't know if you could possibly customize it to actually make one, but you'd probably have to do some easy language coding to make one. I like the linear regression line that self-adjusts itself through the trend so that it shows you the true trend. By definition, what a linear regression line does is tries to center itself between these points, these pivot highs and lows, so that it can actually show you the true trend. So, but I don't think TradeStation has that tool. I'll have to look around and see if it still does. But here's a stage 3 top on the dollar versus the Canadian, and we just started a stage 4 decline here. So that's my weekly chart. Okay. Yeah, it's a reversion of the mean strategy for sure. The extremes would be your 2 standard deviations above and below your linear regression line. And of course you go long at the lower one and short at the upper one, and your target would be the linear regression line itself. So it is a regression to the mean strategy for sure. All right, the Canadian here. This is a demand level that we kind of held us up last week, but we're trading below it. We're bouncing at the very, very bottom so far today, and if that doesn't hold, we probably drop all the way back down to the bottom of the chart because, you know, there's nothing to stop us from falling quite a long ways on this chart, just big rally candles here. And our first demand level is way, way down here at 103. So, and you might bounce on these prior highs that used to be support resistance in the past here. Yeah, trade the break stand? Question. Look what it's doing here. All right, it's kind of bouncing right there today. You know, then you got to worry about getting short after a big move down, and you know, there is really no demand level here anymore, though. So I'm not a real big breakout trader. We could look and see if there's any possibility of shorting a nearby resistance level on a smaller time frame chart. That'd be a safer way to do it. Yeah, we had a rally-based drop that we rallied up to on Friday afternoon. That was like the best opportunity to get short. But we're sticking a candle up here on this 4-hour chart. See what we got here, Stan? This is an area that we've had for demand on a 240 chart that we've only grazed in November. So be really, really careful trying to get short until this gets traded through. This is Custer's last stand for this currency, though, but for a long ways down. All right, but it is a pretty nice looking demand level. So we're kind of close to it today. Yeah, 6-month lows. Yeah, yes, sir. Took a while, but it broke down. And probably the safest way to get short, of course, would be to take a rally up into any of these supply levels, which you know, at least you're shorting a rally into a supply level rather than trying to buy a breakdown and hoping it works. Okay, so that's our Canadian. Luca, let me see what your question is real quick. If trading euro dollar, no point to trade Swiss at the same time. Would you agree? Yeah, but I'd still chart them, Luca, because remember, if the Swiss comes into resistance, then and you're long the, or let's say you're long the Swiss and it's coming up into resistance, then maybe you want to switch up or look to see if the euro's coming into support. Okay, so you want to chart them for sure, but not necessarily trade the two of them. All right. All right. Cool. Yeah, I know you do. Just kind of more or less for the people that are new, kind of trying to point that out. Okay, here's our British pound. Now the British pound on this weekly chart, it's clearing these highs here on the weekly chart. It does have some kind of speed bump resistance, but that's closer to 158. We're at 152, so we got a ways to go. Below current price, though, you know, we got to watch this base rally here. Okay, there's probably going to be some support inside here, and that's closer to 148. All right, so we're at 152, so we definitely have some support. Now, this is the daily chart. This is the supply level that's been holding us back at 150, 150. But because we closed above that supply level, that's got to be some kind of support going forward. Okay, so in other words, this little ellipse here is all done with because we closed above there, so there's no more supply there. But there might be some kind of a bounce at 151. Because it used to be resistance, it should become support. And then we've got 155 here for the next decent supply level above here with a nice big drop. Okay, so we're looking to buy dips on this currency, but it has been in a nice uptrend anyway. Okay, let's go to a 240. On a 240, this 150 area would be a nice little support level. You know, it has been anyway. It was here, it was, you know, here. So it's kind of like very nice support area there. And if we go above here, this is where we're at right now. Well, that's why I had that line there. But it looks like we're just about past this resistance area. This is where we're at here. This is resistance. No question, at about 150, 180 or so, but this is a better one here, closer to 155. So I want to mark this one off here for sure. But this 157 is just, you know, it's kind of a rally-based drop, but I think we've hit that thing a few times. Let's see. 150, 170. Yeah, that's pretty much done. That's gone. We hit it right here on this candle and sold off and then rallied through it the second time. So I'm not even going to worry about that. But we are, you know, pulling back a little bit this morning. Now here's what we could do though. We don't have to come all the way back down here. We could base up here for a candle or two. These are 4-hour candles. We could base for another 4 hours or so and then rally from here and have a support area from here. Okay, so there's no reason for us to pull all the way back down here unless something fundamentally's changed over the weekend. But on the 60-minute chart, let's see how that supply level looks. Okay, it was this guy here, 152.26, and then we have a higher one at 152.91, which we hit once already. So we're kind of bumping our heads up against there right now. And that's what's happening. Let me open it up a little bit. I didn't like that supply level for some reason, but now that I look at it, it doesn't look that bad. Philippe, that's a good question about the trend line. you know what? It has to be rule-based, whatever it is, okay? So this gentleman, Martin Pring, he would say, okay, I got close to the trend line and I closed above it, so I'll go long the next candle. So, here we're touching the trend line, no problem, right? Now, let's say I drew my trend line like this. I would have to get out if this candle closed below it, okay, because of the steepness of the angle. But let's say this 60-minute candle here closes above a brand new trend line that I'm going to draw right like this on that candle. Okay? You could buy the next candle if you wanted to at the open. If the 60-minute candle stays above this trend line, you could buy the next candle above there and place your stop loss below here, even if that candle doesn't touch your trend line. Does that make sense? That way you can still have a logical place to place a stop loss. So I can see what he's talking about, Martin Pring, when he says getting close to the trend line counts. Just like getting close to these moving averages sometimes. With Sam's stochastic system, if you're in an uptrend and you get an oversold signal in an uptrend, as long as you're just above the trend, above the moving average, he'll buy. So in other words, it doesn't have to actually touch the moving average. Here it does, okay, but it doesn't actually have to touch it as long as the price is above the moving average. Okay, so if you get and it's really hard to get the oversold signals on a 60-minute chart. All right, so it sometimes happens though. So in Sam's case, he doesn't actually need to touch the moving average. And in Martin Pring's case, he would do something like what I just described here. If this candle closes above here, which this candle closes at 1800, so if it closes above here, he'd buy the next candle with a stop loss below the trend line. That way you're in. And you may not even touch it, but close enough. Tell you what I'm going to do, Philippe. I'm going to look for the Martin Pring book, or I know I saw an article that he wrote about it, and see if he actually gives you, concrete rules. Because with any of the stuff we're talking about, it's best to have some kind of concrete rule that you use on a regular basis. Personally, I'd rather see, a probe of the trend line and a close above it. Buy the next candle with a stop loss below the trend line. But the moving average, with Sam, it doesn't have to actually touch the moving average. As long as it's above it, he considers it to be a valid signal. So it makes sense. Okay? Yeah. Yeah, right. If it's all rule based. If you say, hey, I probed the trend line, and believe me, with vertical support trend lines, okay, we don't talk about them a lot, but the longer a trend line's on a chart, the more likely everybody's going to draw it and see it. So people are actually going to defend it, right? Yeah, the slope of the moving average is the key for what he does. So he wants to see an upsloping moving average. We're just starting to slope up here. All right, so for some reason, if we were to have some kind of a pullback now on this British pound, and that stochastic went to oversold and reversed back up, and as long as we were above the moving average, that would be a signal to take the trade for some kind of a trend move. Okay? Yeah. Like invitations to trend lines, absolutely, Luke. Right. So good deal here. Okay. All right. So now, 30-minute chart anyway. We are selling off a little bit here on this guy. So there was some kind of a resistance area up there. I just can't remember where it was. Wait a minute. That's it. So there's actually two of them. You had a rally base drop on this 30-minute chart, and you had the higher one, which I think I was a little bit more worried about. But this one seems to be slowing the party down now anyway. So that would mean, where's the next place below current price that I could buy a pullback to this because of the strength of this rally here, right? So in other words, is this thing going to retest the entire move here? Or should I do what Philippe is talking about? How about I draw a trend line right here? Okay, I just closed above here. How about I draw a trend line? If I wanted to get long and try to join this trend, this far along in the thing, but just be careful. You know, there is some sellers up here. How about the 15-minute chart? Here's another reason why rally-based rally, usually we tell you, you know, it's in the middle of a move or whatever. But these guys got to go away if this does turn into a downtrend. How about shorting a rally into this resistance area now? Since we've been doing the class here, we've actually had a rally-based drop and a pullback to this area. Okay. Now, Philippe, you asked again, where's the best place to get short? Here. On the first pullback into this area. Where's the next best place to get short? Would be into this guy here, the new one. That's the second best place to get in, right? Okay. Okay. Yeah, Philippe, that's possible too. Trend lines actually work with those bases too. But anyway, this if this thing wants to keep falling here, it could bounce on this little speed bumps. But again, that's rally-based rally. So if you bought this one, you lost. If you buy this one, you might be okay because it's farther away from price. Plus, it also lines up with old resistance back in the past here. Okay, so we'll watch it. Okay. All right, so that's our British pound. Starting to base and drop here. Right now, that's a 5-minute chart. So it looks like it wants to try to rally again. So, okay. Any other currencies that we really need to touch on before we end the session today? This is the Euro Yen. Yeah, we kind of looked at this one, so we're good with that. All right, we looked at the weekly. Again, the weekly one here, it's got a little bit of weekly resistance here and some support down by 130. Right now, it's at a little prior resistance area. It's kind of holding it back right now. Daily chart, though, it does have a little bit of support down at 131.70 or so. And it's kind of got this rally-based drop that it bumped its head against at 135. Okay, so it's just got a little bit of like speed bump resistance right here. Let's see if on our 240, if there was anything interesting. Nothing really as far as supply goes until you get way up to 137 on the 240. That's a pretty nice area there. But, you know, no real support till you get down to closer to 133 on that chart either. Just to check a 60-minute really quick. We had a little resistance here that we pushed through. So there's a little bit of support here. There's a gap fill going on too, guys. Today's gap is actually filling right now. Okay, so there might be, let's see if there's any supply right above there too. Yeah, here's what you're bumping your head against. This rally-based drop here. And you got a higher one here, closer to 135, and then you got another one above there. So above current price, you got plenty of resistance areas here, here, and here from April. And where we're at right now, you're filling this gap. So, I don't know. Don't like buying into those areas there. Might want to wait till it drops back a little bit. At least this one's a solid looking area. It's a little big, but anyway, who's trading this one, by the way? Anybody trading it, Bruce? Are you trading it? Okay. Are you long or short or flat? Oh, you're long from where? What price? $134.30. Okay. So you're at 134.44 right now. Well, two ways here. You just filled this gap. So if you can close above there, you need to rally above the next one. Otherwise, you know, I hate to tell you to say wait for that trend line to break, but maybe we could find you a base you could hide behind on a 15-minute chart. Well, you got a problem here now because you just made a new supply level on this chart. You're filling this gap right here, and you're in from 34.30. I don't know. I don't know where your initial stop is, but from the looks of it right here, I probably want to have a stop loss. It's not giving yourself much room. I wouldn't look to lose too much on this thing, because it could base and drop through here and take this demand level out. That's the only thing I'm worried about. All right, so be careful. 134.16 stop. Yeah, it'd be right below this base here. So yeah, hopefully it'll base and rally for you. Get back up to here. At least take a partial profit. Super. Patrick, what's the news on the Resource Center? Let's ask Sam tomorrow. He gets all the good news. Okay, so tell you what. If anybody has any other currencies that they want to look at, happy to do so. Otherwise, I think we've checked pretty much all of them. Let's see what we got here. Now, we still got a possible stage 3 top on the euro versus the pound, but we're up here right now. Okay, so when we go down to a daily chart, we had a nice little drop base rally on this chart at about 88.30 that I was looking at for a possible pullback, and that's really a little base above this other base down here, which really did a nice job for us earlier. So that one looks like it wants to stay above here. That's this base down here on the 240 chart. The reason I like it is because of the way price left the level, so that's closer to 88 or so. But we're up here right now, and it looks like it's been bouncing on this little support level here, which is 89.12. And above here, it's got this resistance right there at 90.35. It's actually struggling right here on this little resistance area here too. It could base and rally from here. Otherwise, it's going to probably dip back down to this guy down here. Okay. Thanks, Francisco. You have a good day. Anybody that has to go spend some time with Mom. Okay. As soon as I get done up here, I'm going to go and spend a little bit of time with my lovely wife, who's very graciously agreed to hold dinner until we're done here. All right. And yeah, we're just struggling on this resistance area here. So see, this 30-minute base here looks really, really good though. Oops. It's about, let's say here. This one really looks good. So for anybody that's, looking at bases like that, that's a little bit far away from supply, you might get a nice little bounce on here. But we are definitely having some problems with this supply area up here at, that's this guy here, at 89.70. Okay? Time to go see Star Trek. Good for you guys. Go have yourselves a great weekend, and I feel real good. I'm glad too. That was really, really bothering me. All right, so thank you for everybody for attending. Do me a big favor and just have a great day and give Mom a kiss. And we'll see you guys tomorrow with Sam. Okay, be good. Bye.